So hello guys, I don't know if I'm audible. I know NQ has been really hard to trade today. I know most of you have not taken trades, but currently I'm thinking NQ wants to sweep London and Asian lows. So I took a first trade here. Let me show you how I took the trade. So let me first mark this fair value gap. So I'm expecting this 15-minute order block, this one. If price closes below it, I'm expecting it to push price lower and sweep London and these Asian lows into this fair value gap. So the earlier setup that I took is based on, this is a 1 hour volume imbalance. I don't know if some of you saw it. So I used this candle here to frame my setup. When NQ swept this low and touched this 15-minute order block and then closed above this small order block you see here and created this fair value gap, this is where I took my entry from, right there. Let me put it in another color, and then targeted this the CE of this volume imbalance. I don't know. I had labeled it as a fair value gap, but it's a volume imbalance, so that's why it looks like that. So, and the reason why NQ has smooth highs above here, you can see where I've put this one because of these highs. But now the reason why I decided to exit the market there is because if you look at ES, ES and Dow, they are selling massively. So today is just a case of NQ refusing to follow what the other currencies the other pairs are doing. You can see this is US 500 selling massively. In fact, this was a better pair to trade than Nasdaq. But then I knew Nasdaq will still try and catch up with the other. So this trade that you see here, let us frame this entry here. Let us frame this entry. So what happened to NQ is it swept these highs that you can see here, this one, all these highs, swept them and then dipped into the 1 hour volume imbalance. So this is the last down close candle that dipped, pushed price up to sweep these highs here and all this on the left. And then when you see such wicks on 1 minute time frame, it's mostly an indication for you to exit the market. You can look at where has the market hit on that week. Like for example, in this case, it's a 1 hour volume imbalance. And then when price closed below this order block, now this one became a breaker as usual. So this is now a breaker block. And then your entry would have been here, and then price is now pushing downwards. So I'm expecting this 15-minute order block to continue pushing price down if it's to hold price. This is somewhere actually I could be taking my partials here. I don't know how many pips those ones would be. That would be like 76 pips. So this is somewhere where I could be taking my partials if I was on this trade, and then trail my stop loss to below the breaker and then let price continue. But I believe price is coming down to sweep London and Asian lows because the London highs have been taken. London highs were taken here, and then we've taken the consolidation from 7 all the way to around market open for New York. So if you were to enter this market, this is the best way if you're using breaker block to enter this market. And this inversion fair value gap that I marked on, was it 5 minute? I'm not sure. Yes, this one on 5 minute it's a bearish fair value gap that had initially been violated, and then now that price is trading below it, this also supports your narrative that the market will sell further. So if you had entered a sell here, you'd be taking your first partial after this low or maybe in the breaker, and then we are going down. Now the reason why yesterday what happened yesterday, the reason why I was buying this market yesterday I bought, and I'm going to show what I did yesterday, is because this setup here was a market maker buy model using this 1 hour breaker, where market came and created equal highs inside, just inside or outside the breaker. And then now yesterday was a good opportunity to sell, to buy this market after it also hit opposing 1 hour inversion that had there's a breaker, there's another block here. So this was, someone could have bought during London and New York overlap, and then 930 was here. But I first want us to look at what price is currently doing. So as you can see, the market is always indicating it wants to sell. The fact that it has closed below this order block here, this is an indication that it's going to sell further up to here, Asian lows. There's a 4 hour fair value gap that I had marked down here. I know my chart looks, this is a 4 hour fair value gap here. So I'm anticipating price, maybe it will retrace here and continue buying. But in most cases, I've found out that inversion fair value gaps hold price higher. For example, this inversion fair value gap might decide to hold price higher, but if it gets violated, be sure we are coming down to this this 4 hour fair value gap that is down here. So currently we are on sales, targeting, I would only target London lows if I was selling this market, or that is my current target, the London lows, unless anyone has a question on what has happened today. And this is actually a good sell. You can even exit your market here and you're good to go. So we can look at what happened yesterday, because I entered the market using first presented fair value gap, and someone had told me to explain, and I told them I'll explain today. So this is what had happened. If you look at, we can start from 1 hour. If you look at 1 hour time frame, I had marked this 1 hour fair value gap, and then this is the hourly inversion that has this order block. So during London and New York overlap, the market came and hit the 1 hour fair value gap and closed above. So for me, this was an indication that this market wants to buy. And for people who know how market maker buy model happens, price leaves liquidity up here, drops up to a higher time frame PDRA the way it has done here, and then we buy the buy side of the curve. So I was able to catch this whole buy from here all the way to this highs here using the first presented fair value gap at 930. So we can go back there. I don't know if I should cut price. So this is what happened yesterday. So market opened here. This is the 930 candle. I hope everyone can see this candle. This black candle here, this one, this is the 930 candle. So when it pushed price up, I treated it as an order block. So 930 candle, 931, 932 candle, and the fair value gap formed. So I usually don't trade between 930 before 950. So all this price action that you can see here, I had stayed away from the market. So what happened is market created 930 order block, pushed price up, then came back below the order block, sweeping all these highs, and then came back on top of the order block again. Now at and then macro came. This is macro. Remember what I told you guys when I told you to backtest macro manipulation. What is macro manipulation? Macro manipulation is if you're bullish and macro opens, in most cases it manipulates below the macro candle, this one, the way you can see here, and then now picks momentum to buy. Now this manipulation, it had not hit a significant level, and that is why when price was here or price was somewhere here, I was not willing to take a buy until price dropped back to this 930 order block below macro open, and then I waited for it to come above this order block, and I took my buy from here and held all the way to up there. So how you would have used the first presented fair value gap is when after macro here, and then this manipulation below macro, you could have entered this market here, but your stop loss is below the I mean in this mean threshold of this order block. So even this retracement would not have taken you out. And then anytime the market closed above the first presented fair value gap, it's an assurance, or it's indicating that the market is willing to buy. So when I marked this order block, because I considered this as liquidity sweep, because all these highs were swept, and I wanted to see if this market can violate this. At this point, when it came here, it had already been turned into a breaker. So I wanted to see if it will violate the breaker, take it back to its original state of being an order block, and then I took my buy from here and held all the way. I think I exited somewhere. I got tired of keep on checking the market if it's giving me what I want. So that is how I framed my trade yesterday, using the first presented fair value gap. What I can tell you people is usually wait for 9:30 to even 10. It's not a bad time for you to frame a trade. You don't have to take your trade from first presented fair value gap always, because in most cases, the first presented fair value gap gets inverted. It becomes an inversion fair value gap. And when I started to check it, I used to get cooked because of using it immediately. If you look at what happened to this first presented fair value gap, it got inverted here. It becomes a bearish fair value gap, then went back to its original state, and then even here it got inverted again. So this is usually very confusing for someone who doesn't have a higher time frame bias. But if you have a higher time frame bias, something like this can sway you from wanting to take your trade, because as long as you have your higher time frame bias, all these other small things that happen down here below the inversion, they are meant to scare. If you have your stop loss here, someone will see the first presented fair value gap has been violated, and they might cut their trade prematurely, and then this happens. The market now continues to, I don't know if I journaled that trade yesterday. Let us see. Yes, I think I have it. You can see this is where I exited the trades. So by here I had removed 80 lots, and this was the partial that was remaining for the part of the lot size that I had entered with. So that is how I framed yesterday's trade, for those who are confused about using the first presented fair value gap. Joe, I have explained circumstances under which the market might give or not give you what you, for example, this is how I look at the market. Let me show you. This is how I look at the market. If this is 1 hour breaker here, this one, let me just mark it. This is a breaker here. So I am aware that this breaker might hold price to go up, not to drop into this 4-hour fair value gap that I've highlighted here. So what you do, if you're selling your market to, let's say you want to target for a fair value gap, and there is a breaker here, if you come down to 1 minute time frame, and let's assume the market has already hit the 1 hour breaker, this one, there will always be signs that will show you now this market is reversing. The same way it was buying here, and then it hit the 1 balance, and then after hitting the 1 hour volume imbalance on higher time frame, because this is it, you can see market hitting this volume imbalance here. So whenever you the model, whenever a breaker shows after a higher time frame PDRA has been hit, in this case 1 hour volume imbalance, and then the breaker gets violated, and I can see something like this, market closing below the breaker, I'll be confident to know that this market is not going to give me the liquidity that I've marked here, because it is already showing me signs of reversal through what? Through your entry model. So for me, I know market might use this 1 hour breaker to hold price instead of going to the 4 hour time frame. But then for me to be sure that this market will hit here and then reverse, I will look for something like this. If there is no a reversal pattern like this one, I will hold that price to go to the 4 hour fair value gap. So the market will always give you signs. What are you looking for? If you're selling, it will always give you signs that now we've reached the end of our selling, and you want to go back to maybe opposing liquidity. And one of the ways is through your setup. How do you enter the market? Which model do you use? Some people are very good at trading continuation. Someone like me, I'm very good at trading reversals because I use breakers, and mostly breakers signify reversal of the market for a short time or long term. So that is how you know you are not going to chase the PDRA that you want. Where would you put your stop loss if you are in the sale? What do you mean? This sale or which one? First, fair value gap doesn't work to me, especially from 430. Always gets stopped out. Yes, and that is why once you realize it doesn't work, you can choose something. It is not a must to use the first presented fair value gap. My most high probability setups occur after 10 a.m. Once the 10 a.m. candle starts, that is when I get most high probability setups. If you look at this buy, this was a very small scalp, but then look at what happened from 10. This is 10. From 10 here, sorry, I shouldn't pick that one. Here, you can see. So for me, all these, I consider it as noise. The real setup happened after 10. This is 10, and then that is when breaker formed, entry formed, and then this was a good target for you to exit if you are scalping short term. So that is how it is not a must you trade the first presented fair value gap. In fact, if you learn to sit and watch from 9:30 to 10, you will always get good setups on NQ, because NQ is always like that. Yes, I do consider. I've demonstrated. I've demonstrated several times putting dealing ranges to consider premium and discount in the market. At what time should you consider the first presented fair value gap? Well, I also was confused by that question, but ICT explained that you can take any, as long as it's 9:30 and above, you can take any candle from there and use it as your first presented fair value gap, and you pick I think the biggest fair value gap, something like that. That is what he said. When do you always start trading? I don't live stream. I'm only invited here by the owner of the stream. But personally, I sit at my trading station at around 8:40 and then start looking at what the market has been doing before I start trading. So I think that is it. If you guys don't have another question, but I'm hoping this order block will push price down. I'm hoping this order block will push price down to London lows, because price is already showing willingness to sell. Instead of using fast I always use New York time. So whenever I'm referring to time, I'm referring to New York time. So as you guys have seen, every time I've presented here, I've only shown one entry method in the market. And that is because I've mastered that one thing in the market. And I am not usually interested in any other method of entering the market, because I've tested this over time and it has proven to me that it delivers a lot of times in terms of probability. So have one setup, stick by it, even if it fails, backtest it, know why it's failing until you get it right. And that is why you see most of my trades, they are only based on breakers, and I kill it a lot of times. Even I'm actually in this trade. For those of you who might assume I'm not trading, I am actually in this trade. That I usually don't take trades before 10 a.m. Mostly, I don't take trades before 10 a.m. But whenever I take trades after 10 a.m., it gives me the best setup. So, and now a day like today, you see the way NQ is behaving. A lot of consolidation here, while its counterparts were busy selling. You can see even now, ES is busy selling, and Nasdaq is stalling. You can see. So for Nasdaq today is a day you might consider a high resistance liquidity day, and even if you have a trade, it might hit Asian lows. If it violates this order block, it might hit Asian lows during the PM session. So imagine having to hold a trade on 1 minute time frame all that time, simply because it's a high resistance probability day for Nasdaq, as compared to counterparts. You can see US 500 selling beautifully. You can see Dow selling beautifully, but then look at Nasdaq. It should have taken these lows by now, but look at where it is. So this is how you know Nasdaq is on a high resistance liquidity day, and I usually advise someone to stay away from it when it's like this. It's not a high probability day, and like I have said, I'm in this trade and I'm not even willing to hold it. Actually, you can see this is the trade and I am targeting Asian lows, but it's a bogus trade for me. It's something that will wear me out mentally. Why is it not moving? Is it going to retrace when for example, when US 500 is retracing, maybe somewhere like in this fair value gap, this is when you find now NQ will retrace all the way and take you out and then sell later on in a very, very bad price action. So this is not an ideal price action for today. And even though I want to hold this trade, I might even do something like this just to be safe. But I will hold it up to London lows. The fact that I am trusting my breaker to hold price, and I'm correlating it with what ES is doing and the other pairs. We will create new all-time highs. Definitely, we are going to create new all-time highs. The market is currently retracing to gaps. And one thing that made me know that we are going to create all-time highs is when market violated. You see, this big black candle, this is an order block that pushed price up, sweeping these highs, and then it got violated to become a breaker. You see, and then breaker was retested here, and then more price went down, creator, market maker by model, and then swept and violated the breaker. So when market violated the breaker like this is an indication that this is a failed breaker, which is now an order block. So these highs are definitely something NQ is going to sweep in the course of maybe this week or next week. I don't know when, but we are going to have something like that happening. So for those who have been stopped out, I know price action today is not good for NQ. In most cases, NQ delivers within an hour or two. Within an hour, in most cases, from 10 to 11, NQ usually delivers to your target. So this is not an ideal price action, even for me. And I'm only holding it because I've secured, I don't have risk in the market. I'm not losing any money if it takes me out because I am my stop loss is on the positive side. Unaweza explain relevancy lunch lows and high could deliver PM macro. But I explained that. Go back, go through the video. I think it's the third video from when Lord of Merchants started streaming. You will find I explained the relevance of lunch lows and high. For example, let me explain like this. If we are selling to here and then noon, where is noon? Let us assume this is noon here. This is noon and market has not delivered London lows. We are somewhere here. So what will happen? The market might form lunch. Let us assume this is lunch highs and down here is lunch lows. So there'll be some form of consolidation. And then when PM session comes at around from 1:30 to 2, this is what happens. The market sweeps lunch highs because remember our higher time frame objective or the AM session objective is to sweep Asian and London lows. So the market will usually sweep lunch highs, and then do this. So in most cases, if I'm trading lunch lows and high, I have to look at, did the market fulfill what I was expecting during the AM session? If no, then I will use, if I'm bullish, I'll wait for lunch lows to be swept and then I'll buy on the opposite direction. Or if I'm bearish, like if I'm expecting Asian and London lows to be swept, I'll expect lunch highs to be swept and then I'll find a fair value gap inside here. And then I will sell the market to take out the AM session objective. That is how you frame lunch highs and low. In fact, you can only trade this liquidity for lunch highs and low. You can wait for one side to be swept like this, and then you find a fair value gap and trade and exit here. And it will be a fine trade for you. You don't have to start looking at where the higher time frame objectives were. So that is how I would use the the AM session to frame PM session and the lunch hour highs and lows. So I don't see any other questions. So I think I'll hand over the stream to the owner for now. You can see we are selling going to London lows, and the market is doing as expected. So as you can see, I am using higher time frame PDRAs to support my narrative. In this case, I've told you, the moment price closed below this order block here, this is already signifying, even if it comes back up here, this is already signifying that it's not willing to respect this order block. So, and this, you can see it's already happening. So market is currently inside the higher time frame PDRA, which is the 1 hour order block, maybe up to London lows. If it's going to support price to go higher, it will form another buy setup like this sell setup. Now it will form a buy setup inside here, and then you can buy to the all-time highs. If not, if it does something like this in the 1 hour order block, something like this, maybe we might drop to 4 hour fair value gap down here, and then we buy more. So that is how you read the market. You have to look at, is it giving you what you want? Is the market giving you what you want? The PDRAs that you've marked, for example, this order block, is it or disrespected? Because if this order block was to hold the price, it would only close above half, and then the market will continue buying. Now, I will also mark a fair value gap like this on 3 minutes. And this fair value gap should be inverted and push price down if I am still going to hold my narrative for this market. So this is how you use higher time frame PDRAs to support what you want the market to do. If you are selling, unakuja una mark like this one, and then you wait. Is it going to get violated? If you see only the market weakening, especially on lower time frame, and then this is what the market does. Wicks like this, creates something like this, like that, and then the last instance, it comes and sweeps these lows, equal lows created here, and then violates the high. Now there is a breaker formed here. If I see something like that, and there is no maybe a fair value gap or an order block that the market is retracing to, I will usually exit that market and maybe buy again now from the new breaker that has been formed like that. So you have to understand the market even without it playing out. You have to know the things that you anticipate to see happen for you to continue holding the market or for you to. This is how I've been able to cut losses early when I am trading. Like now, when the market is here, there's something that can happen and I might decide to exit with the profits that you see here. You understand? And it's always good to take partials. For example, in such a PDRA, partials, and make sure you secure something in the market, because the money you pay yourself is not lost. Market goes against you. You are left with that money in the account. So you've closed your day profitable, whether the market played out or did not play out, but you took partials, you paid yourself first, and your risk off. So those are the things that have really helped me grow in this market. Unaweza explain, I have explained. How do you trade PM session? I've just explained to Bradford's question. Kuna some cases the high low is swept, the market continues. How do you handle that? You do, like for example, let us assume this is lunch highs and low, this range here, and you're selling. Like I've said, in most cases you will want to see something like this: the lunch highs taken, and then market drops below the lunch lows. Now, for those of you who don't know, a consolidation is also treated as a balanced price range. So if you are selling and the market drops below, you will always find something in here, either a fair value gap or an order block, and then you will enter from there and sell the market. What happens sometimes is this high is not taken, and you are selling the market, and the high of the lunch highs has not been taken. In this case, for me, I usually wait for a strong displacement, not just a small one, a strong displacement. Let's say the market displaces to there. I will wait. I've told you a consolidation like this one is also treated as a balanced price range. So I will wait for market to come back here, and I'll identify a small PDRA, maybe like a fair value gap, and look at is it being violated on the upper side or is it holding price. So if it holds price and then market comes and takes out this low it created here, now I'll have confidence to enter the market from that new low that has been taken to my earlier target. That is the safest way I always trade when the market doesn't give me, like doesn't sweep one side of liquidity and wants to rally, but I'm not sure if it will really go or just all and then sweep the other side. So that is how I usually trade that one. Are you supposed to use 15-minute candle to frame it as failed order? You can see this one. My entry here is based on 1 minute. Look at this. Where is it? Look at this breaker. This one. This is 1 minute. This is 1 minute candle, which is an order block that pushed price up into higher time frame PDRA and then got violated. So you can see I've used it on 1 minute. So you can always use for the higher time frame, like the 15-minute. I'm using them to support my narrative. If the market is selling, I'm using them to support my narrative, because I know if 15-minute order block gets violated like this, market is going to drop further. So I'm only using them to support my narrative. But for my entry, I've used this 1 minute time frame. You can see here. Market maker, nimekuwa liquidated leo. It's part of the business. I also get stopped too. So, but as long as your risk management is on point, getting stopped out is part of the market. I also get stopped out sometimes, so that is part of it. You only have to make sure your win rate has a higher probability than your losing rate. And talking about higher probability, you can even have a win rate of 30%, but you're overall profitable. If maybe you're using an RR of 1:3 or 1:4, your win rate can be 30%, but at the end of the day, you're still profitable. Risk management is the heavyweight of everything. If your risk management is on point, you will not get liquidated. I assume you're not talking about getting liquidated the whole account. When is the last time you lost a trade? I don't know. Let us look at. I usually journal my loss trades. I don't. But honestly, this week I've not been stopped out. I've only been stopped out on B. Like I've already taken partial, and I get stopped. I'll look for one and I'll show you. But the ability to take partials has really helped me from being stopped out completely in losses, because even if this market came here, let us assume the market hit here and then started rallying, or I am unsure and then I take partials here, obviously I'll trail my stop loss to below the breaker. So even if I get stopped out, I've left that market profitable, even though on a lower margin than I expected. But then I have instances where I enter the market. Let us assume the way I've entered using this candle, and my initial stop loss was here for the people that saw it there. So I've had cases where I enter the market, place a stop loss, and then it comes and takes me out. And then if my bias is still okay, I'll wait for it to come back below the breaker, and I'll take the trade again. But I do get stopped out. I lose trades, but my risk management is what carries the heavyweight for me. I did not trade yesterday's PM session, so I haven't even looked at it. Sorry, I didn't look at it. I wasn't in the house. Is there a correlation between dollar and Nasdaq? I used to correlate dollar and Nasdaq until I realized later that sometimes they used to move in the same direction, and you would see Nasdaq buying on 1 minute and dollar is buying on 1 minute. Even sometimes when you're correlating US 30, you'll see them doing the same thing. Other times they are doing different things. So what I did is I stopped looking at dollar. I can't remember the last time I checked at dollar. I only checked dollar for news and such stuff. But the correlation used to be negative most of the time, and then sometimes you'd see them correlating positive, which is not good. It will confuse you and you won't be able to trade. Kama jana PM session PA was bullish, but we ended up taking lunch highs, then the first macro delivered. It's the same thing I've explained. Are you using any indicator? No, you can see my chart. I don't have any indicator at all. So I've never used, the person that introduced me to trading introduced me to ICT. So I've never used an indicator in my life. Lunch lows were not taken. Yes, and that is how I've explained what you do. And if you are selling and lunch highs have not been taken, I've explained how you frame that trade. You only trade NAS. Yes, I only trade Nasdaq. I've been trading Nasdaq for the last 4 years. Maybe we can go through yesterday's PM session and I'll be done for the day. It's already late. So yesterday PM session, let us look at it. This is the PM session for yesterday. So as you can see, let us use this. This is the lunch hour consolidation here. This one. Where is 130 to there? And then see what happened. market took, I've told you, remember I've told you, a consolidation is also considered as a balanced price range. So market came and sweep lunch highs and we were bullish, but then it did not sweep lunch lows. But then look at this. This is a fair value gap here that market referred to. And like I have explained to you, look at the way the candles are closing above the half of it. You see, now if I was trading PM session yesterday, I would have taken my trade at 350. I mean 1350 macro here. Or the safest way is, like I have told you, if it doesn't take lunch lows, you wait for this high to be swept if you are bullish. Once this new high has been swept, you see there is a fair value gap here. You enter your market from there. And as you can see, this was quite not a bad buy, you see, or even up here. It was something has happened. I don't know what's happening. Sorry, guys. Let us go back there. From the trade from here, because I would have used this fair value gap, and because if you see price consolidating somewhere like this, find a PDRA there, and you will always find a PDRA. Price does not consolidate at a random place. So for me, I would have used this this fair value gap. But then to be safe, this new high that has been created when you're bullish, wait for it to be taken out, and you can see when that time is, what time that one is happening, at 2, exactly at 2, and then entry at 210. That is within the 150 to 210 macro. You take your buy and the market rally. So this is a perfect example of what I have demonstrated. Please share your handle. I don't have a handle. I'm not on any social media, unfortunately. I was on X, but I left. So guys, do you pay for your TradingView? Yes, I have a premium subscription for TradingView. I love how price has revisited the 15-minute inverted order block during the 1050 to 1110 macro. Yep, if you know how to use macros, that's how you can read. You can always see those things happening. So guys, I think I'll take more partials because I want to leave the house. I don't want to go out there overthinking. So I'll take more partials and I will leave the rest of it. If it gives me that, well and good. If it doesn't, I'm profitable for the day and I'm contented with what I'll get. The thing is, these setups, they form all the time. Every day of trading, I always get a setup. Like you will always get an order block that turns an opposing liquidity, and you sell or buy from that one. So you don't have to catch everything the same day. And I'll repeat again, pay yourself with partials. This is how I stay away from losing. Not every time my setups hit my TP. Some of them even turn halfway. But as long as I've taken partials, I always pay myself, and that is how I've stayed consistently profitable. So that is all, guys. You can place your stop loss below the lunch lows. That is where you place your stop loss when you're using that. Okay, thank you for the recap. It's fine.